2017 is a pivotal year. I thought there'd be more breakdowns during the year, especially like in March, April, May. But things held together, not reasonably well, but things held together to avoid breakdowns. And I think this year is going to be much more significant coming in 2018 with more visible, I hate to use the word breakdowns, but people understand what I mean by that. Just fractures, breakdowns, events that indicate that the U.S. dollar is not ruling the seas anymore, the seas of commerce, global commerce. There are going to be more events that signal that the United States is yielding to what I'm referring to lately as the dual universe. In other words, tolerance of the Eastern direction and helm and control that's not under Washington's thumb. The East is going to exert far more independence this year, I believe, 2018 coming up. So, been an interesting year, and I think it has been pivotal. Events in Saudi Arabia point to change. Events in Shanghai with futures contracts refer to RMB, oil, gold, etc. Those events are moving apace. They all point to something very significant, that the petrodollar is on its last dying legs. That's how I see it, Elijah.
Now, speaking of the petrodollar being on its last dying legs, I was thinking the theme of the interview today could be about how we've talked about before, a lot of countries are moving away from using the U.S. dollar. And if you could give us maybe your forecast on where you see this all heading in 2018.
I think we're going to see more momentum building and integration building with the non-dollar platforms. I wrote a public article just a few days ago, and it was about the non-dollar platforms and how they're becoming much more significant and much more numerous. Let me just recount a few. There's the Asian Infrastructure Investment Bank. That seems to be eclipsing the International Monetary Fund. We have the BRICS New Development Bank. It's being called NDB sometimes. That might join with this new BRICS gold platform to become quite significant in washing sovereign bonds like the Treasury bonds and buying gold bullion. We have the Asian Development Fund, which seems to be eclipsing the other Asian U.S. type development fund. We have cross-border interbank payment system. Some people, I'm not exactly certain that that's the name, cross-border interbank payment system. It's being called the Chinese International Payment System also. Let's just call it the CIPS. It's competing with SWIFT now. So when the U.S. slaps SWIFT sanctions against Iran, Iran can say, well, that affects us, meaningfully with the European accounts that we have, but we're going to be doing new commerce with the East using the CIPS as the payment system, no longer the SWIFT. The biggest non-dollar platform is really not a platform as much as a cornucopia, a conference center, a gigantic table. It's the One Belt, One Road, or starting now to become more the Belt and Road Initiative, BRI, led by China. They're trying to get a lot of Southeast Asian countries, Pacific Rim countries, just joined up, former Soviet republics, joined up for the multi-billion-dollar projects. They've got something like $2 trillion in projects lined up. And I don't think there's a single U.S. firm involved because we're boycotting the Belt and Road Initiative to our own peril. The U.S. is also boycotting the AIIB, the Asian Infrastructure Investment Bank. Britain did not. Britain joined and angered the Obama administration deeply last year. So what you have is a lot of non-dollar platforms that are being rolled out. Not ruled out, but rolled out. They're coming into being. They're being introduced one after the other. And they're not going to be involved with dollar final result trade. Now, I make a distinction there. There might be, say, a bridge or a railroad or a port facility built or a pipeline built as part of a major project, like a $15 billion or $7 billion project. And there might be treasury bonds used to pay for that. So that's indirect exchange, as it's called. Two parties conducting business using U.S. dollar denominated instruments as cash for payment to get things built. But once things are built, the port facility or the railroad is going to be delivering goods that are not going to be paid for in dollar terms. And that's really, really important because it means more and more channels, platforms are coming into view that are not dollar-based for the trade payment on the end result. And that just goes directly against the dollar's global reserve status that's been the mainstay for over 40 years. I'm paying particular attention, Elijah, to crude oil because when you talk about a trade payment standard, when you talk about making the final payment and it's not in treasury bills between two countries that are conducting rather significant trade, that's important because it means not only are they not using the dollar, it means they're not going to store the dollar because they don't expect to need the dollar. So the trade payment directly affects the patterns of banking policy, reserves management. So if two countries, A and B, are working together and they don't expect to use the dollar, A and B, for trade payment, A and B nations are going to be removing their treasuries from their banking system. But the most important commodity of all is crude oil. Although it doesn't have the same proportion of global commerce that it did 30 years ago, it's still very important symbolically, and it's important for its strategic element. I'm paying close attention to the Chinese and the Saudis because China had been making overtures to purchase a stake in Aramco. And I think if they got that stake invested, and I don't really care about what Aramco's true value would be or what the percentage would be, because I think those would be lies. But if China has a stake, a significant stake in Aramco, and forks over treasury bonds, they're going to be looking to dump more treasury bonds, then expect China to demand and win the right to pay for Saudi oil in RMB terms in the future. That directly would undermine and knock two legs out from the petrodollar. And I think give it a fatal blow because other nations like Kuwait, UAE, Bahrain, Qatar, they would say, well, okay. By the way, Qatar with the Q, it's already doing energy trade with China in RMB terms. And I've been making a point for quite a while that the other Arab nations are going to win whatever right the Saudis yield to the, and I didn't phrase that right. The other Arab monarchies neighboring the Saudis are going to have a similar kind of result regarding Chinese payment for oil in RMB terms, because they're not going to want to lose their big customer. China's using Russia brilliantly as leverage. They're just cutting back a little bit on the Saudi oil purchases, buying more from the Russians, and prodding the Saudis to accept RMB and oil payments, and so far they're saying no. But if they want an Aramco investment, they're going to have to say yes for RMB payments. Another very significant element in that region is Qatar. Not only are they using RMB for energy sales, oil and gas, to China, but they're the center of command in the Middle East for the U.S. military. You would think that if an Arab monarchy broke away from the petrodollar like Saddam did in Iraq, you'd think that the U.S. would respond very quickly to reverse that trend, to end that pattern. But the U.S. military has a presence in Qatar. Qatar is selling energy products in RMB terms to China, and nothing has happened. That tells me, Elijah, that the dual universe is already here. By that I mean the dollar sphere as opposed to the RMB Chinese currency sphere. Clearly the dollar sphere is much bigger, but if you're looking at growth trends, the RMB sphere is making greater progress while the dollar sphere is losing ground. There are more nations now signing up for the RMB sphere, and there are more nations that are dumping treasuries that used to be in the dollar sphere. So the U.S., I think, is going to tolerate this dual universe and not declare open war against Russia and China together. It's very, very important, because a tolerated dual universe will result eventually in the king dollar completely losing its prestige, its status, and position. By that I mean it will lose its global currency reserve. And for those who aren't really familiar with the term global currency reserve, it means two things: that the dollar is used for trade payment settlement, and the dollar's treasury bonds are used in banking reserves as the primary top-tier asset. So I think the U.S. dollar this year and coming in 2018 will be more clearly losing its global currency reserve status, which has the backside of being trade payment monopoly. That's what I expect to see in 2018, and it'll come in 10 different ways. We should cover a little bit the Shanghai new contracts, Elijah.
Definitely. You're talking about the yuan-denominated oil futures contracts?
Yes, and how it will merge, not formally with the contract, but how it'll merge in usage with the oil-gold contract that Shanghai put out in August. It really hasn't gone very far, but in my opinion, served as a giant flag going up in an office that had not opened. And the flag was saying the petro yuan is coming, and sales of oil will be done soon in RMB terms, immediately convertible to gold. In other words, the flag in August was to say oil sales for gold will become part of the new future standard. Okay, this is, I believe, this triangle of oil for RMB and oil for gold completes a triangle and will become probably the most important triangle of contracts for a generation. Or I should put that differently. This triangle of RMB, oil, and gold, at this point, upon its launch imminently, it could be next week, could be 2 weeks, could be 3 weeks. They said by Christmas, and it's not quite by Christmas in Shanghai. This is the most important contract that we've had in a generation. There might be new ones next year that eclipse it, but this is the petrodollar death warrant. This is the end of the petrodollar. We now have contracts in place where, say, Thailand could buy Saudi oil and use the Shanghai contracts to buy the oil, do it in RMB, and China cashes out in gold. That's amazing. That's very, very significant toward the demise, the sunset, the end of the petrodollar, and what I call the end of the king dollar reign of terror. Because any nation in the last 15 years that thought that it would be a good idea to trade, sell oil, and do so in anything but the dollar has had their leader killed, their nation attacked, and their economy is pretty much ruined. That's the effect of opposing the king dollar. So it's a financial reign of terror. They don't have their swift sanctions weapon. They can still use it, but it's lost its primary effect. If the United States were, for instance, to slap sanctions on Pakistan, Pakistan will say, well, screw you, we're just going to use the CIPS, avoid the SWIFT, and move more closely into the Eurasian trade zone and look for new trading partners in the East and slowly reduce our trading partners in the West. In other words, usage by the United States of the SWIFT sanctions will only accelerate the growth of the RMB sphere. That's the beauty, that's the power, that's the potential of these non-dollar platforms. These platforms have a lot more ancillary, auxiliary tie lines. A Russian gold exchange has just been opened up in Moscow, expected to have a tight Sberbank, Russian Sberbank connection with Beijing, China, where Sberbank already has some offices. One of the most interesting non-financial platform that's come up recently in its growth, not in its origin, but it's the Shanghai Cooperative Organization, SCO. It originally was just Russia and the former Soviet republics plus China. But it has grown recently to include either already or imminently Iran and Turkey. The U.S. lost Turkey. They lost a NATO base. They lost a significant window to Russia. And I think they lost a gold exchange platform conduit, like, say, between Shanghai and Turkey and Dubai and United Arab Emirates. That whole connection is firmer now. U.S. tried a coup, actually might have tried to kill President Erdogan of Turkey, and the result is NATO had to evacuate the big Incirlik air base. I think in time, not right away, piece by piece, they're going to start renting space out in that Incirlik Air Force Base to Russia. And that will complete the failure. I mean, I've got a saying, Elijah, and I think this has been demonstrated in 30 different ways. Every U.S. foreign policy since 9/11 has been a grotesque failure. And why is that? Because 9/11 was a fascist takeover, followed up by the Patriot Act, which I call the Fascist Manifesto. So the fascists are well known for having horrendous foreign policy. They believe in dominance. They don't believe in sharing. They don't care about cooperation. It's a win-lose situation they seek in their dominant roles, and it just doesn't work in today's world. The Chinese and Russians are working for win-win cooperative deals, less in weapon sales, although there are some with Russia and China. But they're looking for commercial deals where both sides win, development of commerce, build a road, build a railroad, build highways, build ports, build airports. Like just take Cuba, for example. Russia has a big commitment of I think it's about $3 to $5 billion to develop a commercial port right in the Mariel Bay area that was so famous in the 90s for dumping people in Florida, dumping prisoners and other folks, just escapees. But the Russians were working to build a port in Havana for commerce. Now, I think on the side, quietly, there could be a small naval facility for the Russian Navy, but I don't think that's central to it. The United States looks to get big weapon sales, big military. We got 170 military bases around the world. Yet we claim that Russia is guilty of expansionism. Oh, really? What does 170 military bases for the U.S. signify? Complacency? So 2018 is going to be really a big turning point year, completion of the turning point that began in 2017. 18 is going to be significant. I got some things wrong in timing. I remember saying right about a year ago now, 2017 is going to see some significant breakdown and major changes. Well, there have been major changes, but they've been signaling the breakdown rather than manifesting that breakdown. I hope that makes sense. I think it does. But you cannot end a 45-year reign of the petrodollar in a single year of events. You need a long sequence of events. You need to integrate them. You need to stress test them. You need to roll them out. You need to make them work. You need to advance their usage, promote their usage, and you need to continue their usage with the opposition under the table and under the sea that the U.S. provides. I think the U.S. is in a precarious position because even I think it was the British Royal Navy came out with a statement recently saying that the West does not rule the seas anymore from either numbers of ships and submarines or technology. Well, we were boasting of full spectrum dominance by Vice President Cheney during the Baby Bush administration. I mean, we can talk about full spectrum dominance all we want, but when we lose it, and when we have lost it in the last 10 years, we better awaken to the realities, or we have some severe shocks and worse, failed policies with initiatives that don't go anywhere, and that cost the U.S. its prestige and reputation and its following. So there are nations right now, Elijah, saying, we don't think the U.S. has the military strength. They're saying, we don't think the U.S. has the integrity financially anymore. They're saying, we don't think the U.S. dollar has a proper foundation anymore, especially with QE and 0%. They're saying that we think the U.S. is self-endearing in its own policies at the expense of the rest of the world, or the rest of the globe, community of nations. Wow, I'm looking forward to 2018. I thought 2017 was a pretty rough year in many different respects.
One of the things that is not discussed as much about the petrodollar and countries moving away from the dollar is the motive behind that. Can you give our viewers some insight into why countries are wanting to move away from the dollar?
The biggest reason, the two biggest reasons I can come up with are QE and I hate to use the word hegemony, but pressure politics. Let's start with QE. The QE policy. I'm sorry, I just got a message that interrupted me. The QE policy is to do unsterilized bond monetization for U.S. government debt, while the dollar and the treasury bonds are being used across the world, and it undermines the global banking reserve system. We can't do that. All right, so you're Korea. They might have, say, $160 billion in treasuries holding together their banking system as the foundation. Okay? Now, Korea is saying, my gosh, in 2012, the United States, the Federal Reserve, started doing this bond monetization to cover all their government debt. Very few buyers of treasuries anymore. Background derivative usage in this spew of QE, a lot of hidden, a lot of lies, and a lot admitted. Korea is going to say, we need to move away from the dollar because it's undermining our entire banking system. You can't do a Zimbabwe, South American type hyper-monetary inflation for the global currency reserve. Okay, that's the biggest reason nations are starting to move away from the dollar. The second has to do with pressure politics, where if you don't use the dollar, you get invaded, you'll be called a rogue nation, you have swift sanctions against you, your leaders will be assassinated, your leader will be arrested and hanged, or disemboweled in a culvert. Nations don't like that. If you say anything defiant against the United States, there's an invasion force coming in, your central bank gold is suddenly missing, ransacked, bullshit stories come up in the Western press, and the nation is gutted. That's the consequence of pressure politics. So nations don't like that. They react by moving away from the dollar and embracing China and entering the Eurasian trade zone and following the RMB sphere. Okay, so the hypermonetary inflation of an unsterilized manner done of banking systems, undermining banking systems, that is very, very important driver for countries to go away from the dollar. And so is, being declared a rogue nation, being attacked, being sanctioned, and being, the victim of the U.S. war effort. Notice that the U.S. military has only attacked indefensible nations in the last 10 years, 15 years. They don't go after nations that have strong military. They go after nations that have almost no militaries and then boast that we're powerful. Well, we're strong. I don't know that we're really powerful. I think the USS Donald Cook emphasized 3 years ago that our naval power is not all that great. I don't think the Aegis targeting and radar system is of paramount power anymore. There have been too many demonstrations that have left the U.S. military, and particularly the Navy, defenseless. And the Russians didn't take this defenseless position that they forced upon the U.S. by killing a ship and killing 1,000 sailors, naval seamen on it. They just did a 20-minute exercise of flipping the bird with SU jet fighters circling around with no opportunity for the U.S. naval warship to fire on them. Their firing system, targeting system was immobilized. Okay, so the world sees this. The world sees that the U.S. is secretly, hiddenly, and it's really not so hidden anymore, funding and arming and directing ISIS with their terrorist activities. The world sees that the U.S. is not funding but supplying weapons to the Saudis that are used in Yemen, which is the site of more war crimes in a shorter period of time than I've seen in a long, long time, except maybe in Ukraine. So I think the community of nations that includes Great Britain is seeing the writing on the wall that China is going to be a more dominant player. China is going to be a more fair player than the U.S. There's a great quote. I don't have it word for word, but it's from Francois Mitterrand, former French president, I think in the 70s or early 80s. I think he was right after Valéry Giscard d'Estaing. Mitterrand had a great quote. I could find it. It'd take me a few minutes, but it just came to mind now. I don't have it in front of me. The quote went something like this. The United States might be an ally, but they treat us with such disrespect and force policy on us to such an extent that we feel like we're a vassal to their empire. They treat their allies in much the same way they treat their enemies. It's all about power. It's all about dominance. Okay, I embellished that a bit, but that is the point that Francois Mitterrand made, that the U.S. doesn't treat its allies like partners. It treats them like vassals. I don't think the community of nations is going to continue responding well to that.
Now, moving on here to the first viewer's question. This one is about the petro-yuan gold contractor, as you were talking about possibly multiple contracts being used together. They're wanting to know if this finally causes the United States government to collapse, will Russia and China maintain good diplomatic ties in their new system, or will there be a China-Russia Cold War coming?
I'm not sure what you mean by China-Russia Cold War. Against each other or joining together against the United States?
I would assume joining together against the United States. Or, I mean, the United States having bad relations with China and Russia.
Well, I think the United States already has bad relations with China and Russia, so I don't know that there'd be much change there. if the U.S. collapses to a much greater and recognizable extent, I think it will be quite clear to all parties, the entire set of community of nations, that the United States is not the global leader, and the dollar is not the leading currency, and there are so many repercussions to a U.S. breakdown that I think is in progress. And I don't think it's stoppable. It's got too much negative momentum. The biggest effects from a U.S. more recognized collapse will be on the dollar, will be on the U.S. government debt, will be on treatment of treasury bonds. Remember, it's still the primary, like 35% or more, it's still the primary asset in the global banking systems. I mean, like Spain's banking system, Portugal's banking system, India, Pakistan banking system, Saudi banking system, not Iran's, but most nations are loaded with treasury bonds. South Korea, Thailand, they've got treasury bonds. That's their basis and biggest element for the foundation in their banking systems. So the reaction by the many, many nations will be significant. It's going to be so far-reaching that the rejection of the petrodollar is just one. It's a hint for many, many things coming. We have so many events that are coming and are going to be follow-on events. I'm looking for events like the U.S. shutting down 100 foreign military bases, the U.S. shutting down 50 embassies. I don't know about China and Russia becoming at odds with each other. I don't think that's very likely at all. I don't think that's the thrust of the question. But for the last few years, ever since Ukraine, the Ukraine war that was engineered by the United States and Israel pretty much pushed China and Russia together, and they went in a very accelerated initiative to construct the Eurasian trade zone, the Eurasian Economic Union. I prefer calling it Eurasian trade zone. It's expanding, and the One Belt, One Road, Belt Road Initiative, that's enormous. And it came about all after the Ukraine war. The Ukraine war was one of the biggest policy errors the United States has committed in 100 years. Trying to blame it on Russia, just pure nonsense. It was done with amphetamines, Langley and the Mossad in the Maidan in Kiev. They handed out amphetamines and were shooting people from the rooftops to start that war off and to create the conditions for a coup d'etat. The United States put up its flag in the Ukraine Security Agency office building. Okay, that was a victory, a statement of victory, and they blamed it all on Russia. Oh, come on. We're seeing European resistance right now to these Russian sanctions, and I hope we see a lot more because it's really wrecking European economy. Okay, let's move on to the next question.
This one is from Fred, and he's wanting to know, when countries stop using the U.S. dollar and sell back all their treasuries, can't the Fed and the U.S. Treasury Department covertly buy back all the U.S. dollars and treasuries that are sold and then keep the U.S. dollar index stable?
The questioner is describing exactly what the Fed and the Department of Treasury have been doing for the last 2 years. So it's not can they do it in the future, it's they have been doing that in the past up to the present. Okay, there has been a statistic pardon me, a statistic that the U.S. Treasury Department keeps track of. It's the last 12 months, LTM, the last 12 months of foreign treasury bond sales. So you bring on a new month of January and you knock out the 13th month. You knock out the month 13 months ago. So you're keeping track of the last 12 months at each time. Each reading is 12 months, the most recent one. Anyway, that had been, a year ago, that had been pretty steady, between $350 and $430 billion for the 12-month period. There are very, very few Treasury buyers. So if you had a dumping of $400 billion in the previous year and very little buying, how come the Treasury bond yield hasn't zipped up to 5 and 8% to rival that of Greece and Italy in the past, before the Euro Central Bank got in there and managed things? It's because the Fed and the Department of Treasury have been doing exactly what the questioner is wondering. They've been secretly buying it up using the Exchange Stabilization Fund managed by the U.S. Treasury Department, using derivatives to fabricate like the interest rate swap derivatives to fabricate, using gaming off the short-term, long-term bonds, gaming off that, producing fabricated, fictitious, false demand for Treasury bonds, and allowing Wall Street banks to increase their leverage so they could buy more bonds with less money. It's up to well over 100 to 1 for Treasury bond purchases, the leverage used by Wall Street banks. So, let's move on to the next question. The answer to the lady is, or person is, yeah, that's what's been going on for a long time.
Now, Jerry is wanting to know, do you see a gold and silver backed cryptocurrency in the up and coming reset, and would it have a possible relation to the SDR?
To the SDR? I don't really know what the IMF and the SDR are going to be doing. I think they're testing the waters in a number of respects. But it seems like the main thrust of the question is gold-backed currency. I've been saying for quite a while, I'm going to redirect the answer here. I've said what I could. I don't know what the IMF and the SDR are doing. They might come up with an SDR gold-backed bond. They might come up with a cryptocurrency backed by the SDR. I don't know whether that'd be backed by gold, possibly, but I think it would not be decentralized, so it would not necessarily work unless they enforce it by legal terms. In other words, criminalize noncompliance. Here's what I think is important regarding the gold standard and gold-backed currencies. First is gold in trade payment. Okay, let's get practical. Banks are really the province of the U.S. and the West. The financial markets, the same. U.S. controls it with a lot of financial rigging and a lot of corruption. Financial markets that are dollar-based are almost uniformly, universally corrupted. So the weak link is in trade payment because the East is a predominant producer now. I'm not talking about emerging market nations. I'm just talking about the entire East, Asia, Pacific Rim, BRICS nations, and emerging market nations. All of them rolled together, and I think they're all going to fall in line with the Eurasian trade zone. Their strong point, their forte, is production. So they're the ones who load the ships that head to the U.S. ports as part of our Grand Graham import scheme that's not matched by exporting. So these Eastern nations are going to make the terms and risk sanctions and attacks and swift obstacles and you name it. But they're going to demand a different form of payment. And I think atop this RMB gold oil triangle of futures contracts in Shanghai, China. Atop that will be the gold trade note. I think it's going to come sometime in the year 2018. I'm hoping it's not too many months. But when it does come, countries can demand that the United States pay for a shipment of oil or a container vessel, loaded with, home domestic products and car parts and whatever, things that go to Walmart and Staples and Target. These Eastern producers can say, we want to be paid in the gold trade note. And that will have its foundation in the oil, gold, RMB futures contract triangle in Shanghai. That's, I think, the first step. And notice how China is trying to pull the Saudis into making acceptable the RMB oil payments. Okay. The second step is that they're going to force that into the gold trade note. And then you might say, well, gosh, doesn't that really mean the RMB is gold backed? Yeah, but from a practical viewpoint and a manifestation via trade payment, that's where I think the change agent comes. Because after the gold trade note becomes more standardized and grows in its usage after the first several months and the first year, then you start seeing changes in the global banking reserves management for various nations. They're going to be dumping more treasuries. I got a little theory. I've stuck with this for 2 years. I think the new development bank for the BRICS, NBD, new development bank, I don't think it's going to be so much about development as it will be eventually for converting sovereign bonds from the major nations into gold bullion for the BRICS nations and the 113 nations that form the BRICS alliance. The BRICS NDB bank used to convert treasuries to gold bullion. Not just treasury, but euro bonds too. And UK gilts and Japanese government bonds, JGBs. So gilts and JGBs might also join the euro bonds and the treasuries in conversion on a big scale. And I think the NDB would be a perfect site for that, because notice in just the last couple of weeks, the BRICS announced a BRICS gold trading center. And no usage of futures contracts will be involved. No price discovery, no leverage distortion of prices using futures. Oh gosh, wouldn't that be a great place to buy gold from those dumping the treasuries using the BRICS New Development Bank? And you notice they're calling it the NDB Bank more lately rather than using the word development. And to me, that's only adding fuel to my suspicion that the NDB is going to be moving away from development, like treasury bond conversion to gold. Oh boy, that's very big. So I'd watch trade payment before I'd watch currencies regarding the backing by gold, because trade payment backed by gold is coming first.
All right. Now, this one may be a bit theoretical, and if so, we can just move on to the next question after this. But Richard is wanting to know your thoughts on the cryptocurrency market and how quantum computing could be used for mining a cryptocurrency, and the possibility of them monopolizing payouts and therefore forcing out small miners, and what your perspective is on all that.
Oh boy, that's too many questions all at once. I got to admit, I like to be honest as an analyst. I'm learning about cryptocurrencies. I'm learning about blockchain. I'm more impressed with blockchain than I am cryptocurrencies. There seems to be a very limited supply and a lot of demand for the cryptocurrencies, while at the same time, they don't have a precious metal backing. They have an electronic work backing, which probably is more viable than the dollar, but still it's not as viable as gold and silver. The Voice has used a new term recently. He called it crypto money. Crypto money is cryptocurrencies backed by gold and silver. And eventually they might be backed by, other related hard assets like, platinum or diamond or a basket of commodities. A basket they might include, say, wheat, soybeans, iron, aluminum, and zinc. I mean, just for example. I think it's going to be very difficult to stop the crypto movement. But I think it's going to do a jump shift soon toward crypto money as opposed to cryptocurrencies. And people better be very careful. There's no doubt that that cryptocurrencies like Bitcoin, they're for real. But so's the risk. Governments are already starting to look at the potential for taxing and the need for tracking large movements. And they're using their terrorism card once again, saying that terrorists, for example, arms shipments to terrorists could be paid for in cryptocurrency. All right, they would want to stop that. Okay, now could you repeat the portion of the question that had to do with miners?
Right. They're wanting to know about how quantum computing could be used for mining a cryptocurrency and the possibility of monopolizing the payouts and therefore forcing out small miners.
Small miners, not of gold and silver, but miners of crypto.
Right.
Okay. I think quantum computing techniques is much more likely to be used to hack and to harm the crypto space than to fortify it in the mining function. We just had an enormous event happen a week ago in South Korea where an entire crypto exchange was destroyed by hacking, after we've been told for a year that the cryptos are very solid in their encryption, with even elliptic encryption. Elliptic encryption. Wow, that's hard to say fast. Their elliptic encryption is more powerful than standardized encryption. Well, if that's the case, why did the South Korean exchange go bust and get ruined by hacking? Why have there been wallet invasions and hacking and thefts? I've been told that if you leave your wallet as part of your computer within your computer storage, then you're more at risk than putting it on, say, a flash drive with encryption kept externally. That makes perfect sense. What I'm reading about quantum, I'll just give you one example of what quantum computers can do. And I'm not an expert in this, but I did a little bit of reading, I think it was around September, to try to make an intelligent story about it, to try to come up to date temporarily. It's very difficult to stay up to date all the time because developments are very rapid. But here's an example. If I want to do a check of everybody who's got my last name in the New York City phone book, and I use a computer, well, I would do it sequentially. I would start at page 1, finish, page 2, finish, page 3, and work my way up to page, 6,000? Okay, but a quantum computer could deploy much more powerful methods where they might check, say, 500 pages simultaneously for that last name, my last name string that has 6 letters. Okay, well, if you're doing 500 pages at a time, instead of 1 page at a time, you're going to arrive at your completed search 500 times faster using your quantum computer. I don't even understand their software. I just have descriptions of how it works. But I have a bachelor's degree actually in computer science from the 70s. So, I'm a Fortran animal. I'm an assembler, Fortran animal that had some experience with COBOL, which I thought was just vile, disgusting. That was a business programming language. I had to learn modular methods later, like 15 years later, 20 years later. That's okay. It's all right. I don't mind learning. A lot of people do. I don't mind learning. So this quantum computer concept, it might possibly improve the mining procedures. I don't know. I'm concerned right now that the crypto space is using more electricity than Denmark for their entire economy. And I think there's some limitations coming from that. We're going to hear more about that in the future. I hope that's an adequate answer. Let's move on.
Now, I think this will be our last viewer's question, and this one is from David. He's wanting to know, how stable would good gold and silver miners be in a severe downturn of the world economy?
You're talking now away from crypto miners and to metal,
gold and
precious
silver
metal
miners.
miners.
Yep. And he makes the comment that companies located in North America and Mexico seem profitable and have good reserves.
I personally don't like the mining stocks. I don't like them. I have been on record since 2008, so I'm now entering my 10th year of not liking the mining stocks. And that position has been largely justified and successful. That does not address the future. As for the present, not the future, the present, the mining stocks have some big problems. Their companies have a lot of marginalized properties. They're not profitable, in other words, to enter operations and produce the gold and silver, even with byproducts of zinc or copper to cut their costs, whatever. The same mining companies have severe problems in cash flow. They're having trouble raising money through secondary stock offerings. They have ongoing problems of executive stock options and having them come online 12 to 18 months later, eligible for sale, which does an additional 15 to 20% whack of their stock during this price suppression era. They also have another problem that's not very well publicized that I have secondhand information on. A friend of mine has the firsthand, so that made me secondhand. He had his neck put in the dirt by a boot from a guy holding a submachine gun from the Mexican cartels. They're stealing portions of mine output by hijacking trucks, and the mining companies are lying about their output, saying they've got lesser yield rather than admitting they had a truck stolen. All these problems are current with the gold and silver mining companies. I don't think there are going to be a whole lot of mining companies that survive this period. They're deeply wounded. There are a few that stand out. I love Silver Wheaton. I love First Majestic. I think they're going to do very well. I think Silver Wheaton is going to do very, very well. They've got these long-term contracts to buy byproduct silver when the companies are much more interested in producing zinc or iron or copper or whatever. And they just happen to have a bunch of silver on the side and they don't want it. So they sell it off to Silver Wheaton, which pays a pretty handsome amount up front for multi-year contract and supply line. I just don't like the mining stocks. I think silver bars will do tremendously. In a year or two or three or four, I don't know exactly when. I have no crystal ball, and I certainly don't know the schedule of new U.S.-led wars. And I certainly don't know the schedule of new Wall Street bond frauds. But in the next few years, it could be soon, we're going to see silver announced as the center of some new next-generation energy systems. I think silver is going to be unbelievable. So the silver mining stock, that's why I mentioned Silver Wheaton and First Majestic, they're going to be great. But you just don't know if a smaller mining stock has significant fraud in their accounting. You don't know if they've got hijacked trucks. You don't know if they got a slew of new stock options coming on. And I don't like any of that. Silver bars, silver coins don't have that. They don't have that liability, risk, undermining effect. All right, let's move on.
All right. Well, Jim, Willie, I think that was the last viewer's question. I really appreciate your time today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
I think we covered a lot of areas. I don't have much in the way of final thoughts. If you go to www.goldenjackass.com, you find a public area. It's called Main 5. It's the 5. It just means that it was the 5th version of creating that page. I don't have a sophisticated web page. It's not my big meaning, not my purpose for life. I rely on content. We've got an 80 to 90% correct forecast rate. And that is just tremendous, I think. And it's the most solid selling point I have for the hat-trick letter. But the Main 5 HTML webpage has public interviews and public articles. I try not to repeat with an interview unless the host makes the interview available for my followers and subscribers to see for free. But in addition to checking out the web page and bouncing around, and if you're new and not very well schooled in all this, haven't learned much, just bounce around for a month or two and read up. There's plenty to read. We got Christmas vacation right now. I'm looking forward to the bowl games. We don't get quite as good bowl coverage, but we do get good coverage here in Costa Rica. And there's a little hotel, a sports bar hotel I go to when I want to see an obscure game. It's a guarantee because they got about 7 games going on at once sometimes. Bounce around and learn. But if you're a veteran to this and you've been around for a few years following the gold dollar battle, sign up for the hat-trick letter. You don't need to bounce around quite as much. You've already been informed as to the major problem and challenges and the likely paths that we're going to head toward, that we are heading toward with respect to gold. We're going to see a return of the gold standard. It's just going to be a different form from what many of the old school artists are expecting. But the hat-trick letter consists of 2 monthly newsletters, Elijah. One is called the Global Money War Report, and the other one is called the Gold and Currency Report. I try to divide the topics and themes into those 2 reports. They overlap a little bit, like with respect to, say, the petrodollar and banking functions. But it's a labor of love. I enjoy this work tremendously. It's the most fun I've ever had in a job. I did have a different kind of fun when I was working for Digital Equipment Corporation in early 90s, a different kind of fun where I was using some multivariate statistical methods in marketing research, and it was just huge fun and satisfaction, and multi-million dollar results from projects. It was just so satisfying. I don't use the statistics so much as I do the marketing research skill set. what's important? I got 10 facts in front of me. What's important? And what's important with respect to the dollar? What's important with respect to building the Eurasian trade zone? What's important with respect to undermining the petro? What's important with respect to, say, the collapse of some big banks? Okay, that's marketing research. I enjoy that tremendously. I think with my team of 8 or 9 colleagues, we cover things pretty well. We don't miss much. That's one reason. I'm sorry, I got something. That's why we don't get many forecast errors. The Voice has a nice little compliment he gives me. He said, Jim, what you think is one forecast error, it just is not yet correct. Oh, okay. And that one he was referring to was the Nordic euro currency coming for Central European nations that will be backed by gold. He's referring to Germany, Austria, Netherlands, and probably Finland. They're going to break away from the decrepit, bankrupt, and not so successful Southern European nations, the pigs, Portugal, Italy, Greece, and Spain. I don't know why France isn't included in that list. They're not much different. If you did a marketing research cluster analysis of the European nations, you would probably find France being in the same cluster as the pigs. Same as Italy, same as Greece. They're just more refined, have better wine, have better cheese, and they have a really good friend in the Germans who are bailing them out all the time. A little known fact here as we close, Elijah, is over 90% of French government debt is owned by German banks. So they're not going to let them fail. The French and the Italians are doing something very clever, trying to come up with a new kind of sovereign type currency to use it toward satisfaction of deficits, but it's not really money. Think of it as a high-level special type of currency. And I think it's a precursor to reverting to the Italian lira and reverting to the French franc in future times, not distant future.